A global economy jolted by an oil shock now gets a tariff reminder. That's the headline from Patricia Cohen, the New York Times global economics correspondent in London, who has covered trade policy for more than a decade. "We've all been down this road before," she writes. President Trump issues a blitz of punitive tariffs on allies and rivals, straining trade, rattling bond markets, raising prices, and injecting more uncertainty into the global economy. The difference now is that the United States is at war with Iran, key trade and energy routes in the Persian Gulf region are blocked, and the global oil price is near $100 a barrel. When Mr. Trump unveiled his original cold blanket of tariffs on April 2, 2025, oil had been around $70 a barrel. Karsten Brzezinski, an economist at the Dutch multinational bank ING, says these new trade tensions come at a moment when the global economy, due to higher energy prices, is in a weaker spot than on Liberation Day last year, referring to the day President Trump announced the specific rates. The new import taxes on more than 80 countries, including members of the European Union, are Mr. Trump's latest bid to reimpose tariffs after the U.S. Supreme Court struck down many of his previous levies in February. The tariffs, which use trading partners' unfair labor practices as a rationale, replace a similar, temporary set he imposed right after the court ruling. More tariffs are expected to follow. Mr. Brzezinski and other analysts said the economy had already absorbed much of the inflationary impact of Mr. Trump's trade war. "The worst of the tariff-related goods inflation is probably behind us," said Carl Tannenbaum, chief economist for Northern Trust, a global financial institution based in Chicago. Companies raised prices last year and didn't roll back those increases after the Supreme Court's decision. Both the tariffs and their erratic implementation tend to hamper long-term planning, dent investment, and drag down growth as businesses are forced to spend time and resources figuring out how to adapt their production and supply chains. Even so, at the moment, the escalating war with Iran, which began 5 months ago with attacks by the United States and Israel, is having a much greater impact on the health of the global economy than tariffs are. In Japan, the government cabinet office said on Friday that companies might be passing on increased costs caused by the war in Iran at an ever faster pace than they did after the Russian invasion of Ukraine in 2022, the last great global energy shock. Key energy trade routes in the Strait of Hormuz and the Red Sea continue to be disrupted. Oil prices jumped again this week, as the Iranian-backed Houthi militia group in Yemen escalated its confrontation with Saudi Arabia and opened a second front in the region's conflict. The spike in oil prices sent jitters through the market. Thanks for listening.